Well, hello. Happy Friday, March 13th, 2026. If you're live or if you're listening and watching later, welcome to the Fintech Book Club, our quarterly discussion of the latest books published in FinTech. And welcome, Stessa Cohen, Effie Pilarino, and Jim Perry. We're the founders, the hosts of the discussion, but not the only ones. You can join us during the discussion by putting in your comments and questions, and we will get to them during our discussion today. Today, we're discussing Wealth Management with a Difference by April Rudin and Nick Rice. So let's get started.
This is the real
Thank you. Thank you
right?
for I have it, but only two hands.
We love physical books.
Whoops, sorry about that. So submit your questions and we'll get to them. Let's start with the first question. That's not about the book per se, but a high-level view. Why wealth management now? Why did we read this book? Why do we think it's important? Why is wealth management important now versus, I don't know, 2 years ago, 4 years ago? Let's start with you, Effie.
I mean, there aren't many wealth management books out there. I am biased, knowing April Rudin for many years from the early days of my fintech involvement. Met Nick Rice personally last a year, just before the book was published. But really, wealth management is at an inflection point for all sorts of reasons. First of all, the 60/40 traditional portfolio is really getting, what is it getting? Transformed. It's up for discussion, like everything, for a redesign. We are looking at alternative investments of all sorts, democratizing access to them. We are faced with changes in the business models of advisors that are typically traditionally charging a percentage fee on AUM. We are looking at disruptive technologies like generative AI or agentic AI that are really changing the way advisors interact with their clients and wealth management is delivered. And the most important is we are at a phase where we realize across the board that just transactional financial services doesn't cut it anymore. Right. We're talking about moving to more holistic services. We'll have the opportunity to talk about that and how it connects to other books. But really, this is the time to talk about these trends. And throughout our discussion today, we'll many times emphasize the fact that even if you're not in the wealth management business, there's a lot to learn from the book and the insights that we will discuss, whether you are a banker serving lower income or mass affluent investors or a pay tech company. We are talking about a world of financial services that is really breaking silos and looking to create ecosystems that have value. And on that note, I pass it to you, Jim.
Sure. As I mentioned in the prep portion of our call before we went live, I'm speaking today from Illinois Bankers Association conference, and I was having a conversation last night with a wealth manager, and they're actually not talking about some of the issues that are highlighted in this book. So I guess for me, the short answer really is the connection to fintech is really everywhere in this book, even when it's not a headline topic, right? Because April and Nick have structured this book, largely around generational change. Who's inheriting wealth, who's creating it, how expectations are shifting. But I mean, here's the thing. every one of those generational shifts is being either enabled or accelerated by technology, by financial technology. So I mean, there's even that wealth tech portion in the book, that chapter. April herself has said it all the time. It underpins everything in the book: talent, operations, compliance, client experience. All of that is being either supported or under, the foundation underneath it is the change that's happening technologically. So I'm excited for this conversation today.
Yeah, I was really curious when we started reading it, going, isn't this like the stream against which we've been reading? Financial inclusion, ethics in fintech and banking, financial management, customer centric banking, even things around digital identity, all the whole spectrum of the books that we've read, including, about the branch. And the more I read, the more I became, on multiple levels, this book addresses all those, whether it's how these wealth tech, wealth management can be leveraged with inside a bank, a traditional bank, and probably inside a traditional wealth management firm to create new products and services that are not for the high net worth, the ultra high net worth, and can be modified and reused for other kinds of clients. But also identifying the customer concerns and requirements for their products and services as they expand, because which goes to at least a couple of books, what their values are, what they want to do with their money. I mean, there's a lot of discussion in this book about legacy, philanthropy, even how people want to invest their money while they're still living, is not just what makes the most money. Maybe for some people there are, but they cite some data on younger people wanting to know what they're investing in and wanting to invest in this kind of thing, and so that becomes really important. The manager, just like the banker, can't go on autopilot and say, oh, you need this checking account because you have this savings account. Yeah. Or, how do we upgrade a credit union member from a auto loan to a mortgage because that's our next best sell, as opposed to what is it that they want?
Or how do we support a client that has lost their job? Is that something that a banker should be looking at? There's all these questions, and as you said, to me, the three books that kind of connected closer to this one was the new ethos in banking, the customer-centric innovation, and a bit biased, the branch tomorrow too, because with Paolo in our chapter, we do talk about envisioning a 360 advisor in the physical branch, somebody who can really listen and answer holistically, rather than saying, oh, this is not my department, I'm in credit, I can't answer this, and so on. So,
right. Nobody wants to be handed off, whether they're ultra high net worth or living paycheck to paycheck. I think that, is just really, service can really make a difference, I think, at every level. And what is financial services? Not just managing your transactions anymore, right?
Right.
Yes.
Technology can and maybe should be doing that. So let's go to our first question. What's the big idea in this book that the industry is currently ignoring? What can you pull? What did you pull from this book? And let's start with you, Jim.
If I had to kind of distill it down to one kind of big thing, it's almost to the point you just made, Stessa, about some of the concepts here. While we're talking about high net worth and ultra high net worth, individuals, some of the concepts actually kind of are applicable all the way across the economic spectrum. Because, I mean, the really big idea here is that wealth management is shifting. I mean, it's no longer just framed around an investment business. You know, it's a generational relationship business. I think that's the kind of subtle shift that the book is inviting us to take a look at. Because, I mean, for decades, the industry really optimized around things about portfolios, performance, accumulation of wealth. But what this book is really highlighting is that as we're moving forward, you know, those kind of decisions are changing because younger investors are approaching things differently. Women are commanding a larger share of wealth and will, as we deal with this great wealth transfer that's supposed to happen, or it's already occurring and will continue to occur for the next 20 years or so. And these audiences, these various shifts in the demographic profile of those who hold that wealth, they approach money with different expectations around purpose, around transparency, around digital engagement, especially around digital engagement. So it's really calling on wealth managers as they move forward to kind of lean into those relationships and managing not just those holding the wealth, but the entire family, the, you know, multiple generations.
I would enhance what you're saying and build on it. For me, what stood out was this: let's build the retirement hubs instead of what we have now. Wealth managers look more like investment shops, both because of the business model. You pay a percentage, you know, if you bring 10 million, if you bring 50 billion, you're paying depending on the assets, versus you're paying because this is a holistic service around lifestyle, and especially around planning your life. And as you said, Jim, it's not only the finances, it's what's the purpose. And actually the author suggests using this push, what's called the push framework, which is purpose, use, socialization, and health. Right. Those are the four dimensions, and really helping customers and seeing them, as you said, as families with all what concerns them, be it philanthropy, be it family governance, caregiving, housing, all these issues. And really it's shifting. Even technology needs to shift because of that. Because if we think of retirement hubs, we need technology that is not just taking care of better efficiencies in the back office or the middle office, but really thinking of the end client, and also, you know, the human resources. What are their expertise? How to focus on this? And then you need multidisciplinary teams. You need people that are specialized in tax, in philanthropy, in accounting. So it completely changes the picture. So
well, and to just amplify that even further, I think one of the things I think you both know, I speak a lot about the longevity economy and how that's shifting what institutions have to look at, all the rest. So, I mean, this book like captured so much of the kind of concepts that I'm out talking about all the time. And one of the biggest things that I don't hear bankers really looking at is not only wealth management, but across the industry, we're having to shift to help families navigate transitions, because more of those transitions are going to be occurring over the next 10, 15, 20 years. And, you know, we're talking about generational transfers, demographic, behavioral, all of these things are forcing the industry overall to have to focus on, okay, how do we help them navigate these transitions?
Well, you know, this is really interesting because long before this book club, many years ago, an older friend of mine whose husband had passed away, and so she had inherited their everything, right? And then now became a high net worth individual, went to her financial advisor that her husband had always worked with, and she really was never involved. She was a social worker, right? So
Mhm.
not necessarily well versed in money. And the advisor treated her like the little lady,
Oh, oh.
the little lady who can't possibly understand finance because she's the lady. And the next day, she switched financial advisors. Um, and you know, so there's the traditional, and we have a great comment from from one of the followers, Heidi Custer's, around the transfer, and it's also going from men to women because they live longer typically. And if the firm or the bank is assuming that the customer is a man and that they're aiming products at men, what happens when the wife or the spouse inherits it, um, that it's not just, so, management has to involve, as Jim was saying, the whole family, but also maybe that spouse from the beginning, regardless of who it
It's
is,
a
because it's part of the family.
Yeah, yeah. It's also reskilling the advisors that are really not trained to deal and manage family relationships. They've been really focused on that investment part, the portfolio rebalancing, and
Yep.
maybe tax harvesting and so on. So that's part, and the authors do mention that in the book, that this generation of advisors needs retraining, and that is one aspect
You know,
Yeah.
of it.
I'm just noticing that April has just chimed in, saying that 75% of widows change advisors within the first year of a husband's demise. And one of the things I was just kind of looking at the updated information from Cerulli Associates, they've upped the kind of dollar figure that they're saying will be transferred. But one of the things that came out of that update was that, 54 trillion is going to be spousal transfer before it's generational transfer.
Right.
And 40 trillion of that will go to widowed boomer women. Now, again, across that boomer platform or demographic, think about a lot of boomer women, grew up in the 60s, 70s, they're not going to take that male wealth manager tapping them on the back of the hand saying, there, honey, I'll take care of it. It's really causing a shift in focusing on empathy, on all those kind of ways of interacting that haven't been part of the wealth management conversation for the last several decades.
Yeah, and I think so it points to me one huge idea that the wealth management industry is ignoring is that they have a huge opportunity being handed to them.
Mm-hmm.
There's so much data, and it's complex, because one of the things that this book goes through, and I like the way it's organized by different topics rather than chapter one, where it all began, but the authors really break it down. It's complex, and it just can't be throwing up a website with a bunch of dense articles that nobody wants to read, or can't read, or doesn't have time to read. If that's not, there's no single fix here. It's multidimensional. It's understanding the nature of the great wealth transfer. It's understanding the need to move from transaction management to advisory, really highlighting that and putting in place the technologies, the infrastructure that can accommodate the technology changes going forward, improving customer experience, because, even though we're talking about a high touch area of banking, it doesn't mean that everything's going to be in person,
Yeah,
just
yeah. Yeah, actually, we've touched on the issue of women, the generational transfer to spouses. But there's another big trend that the authors talk about, which is these new billionaires that are minted across the world, whether it's in the US, China, and India. They're younger. A lot of them come from crypto type of wealth, and they have a different culture and mentality and need to be understood how they want to be served. What kind of hybrid relationship serves them? And also they are introducing another complexity where they might have earned their money in one jurisdiction. They might move their company to another jurisdiction and live in a third jurisdiction. So,
Right. And
add that complexity to wealth to wealth management.
right. And that also goes downstream because there are digital nomads who are not high net worth,
Right.
but need to bank around the world. And so same with businesses. There are startups that start in one country and then move to the US because that's the market that they want to be in. And they need to have that. So how do you detect also that new millionaire or billionaire if you're not integrated across, especially in traditional banking, across the bank, and if you have those silos? And that I think what we're looking at is some of the infrastructure and future technology questions around how do you do that if traditionally wealth management has operated not unlike other parts of the bank in a silo.
Well, not only operating in a silo, but again, traditionally, it's always been organized around a single decision maker,
Right,
right?
right.
And whether you're talking, anything in banking for that matter, I mean, it's always focused on that single decision maker. But what we're finding in the longevity economy, of course, right now, like 1 in 4 adults in the US live in multi-generational households. We're seeing a rise in financial caregivers where you have multiple people in a household involved in making those financial decisions. And if your kind of investment advisors, your wealth advisors aren't kind of organized that way, you're going to miss significant relationship opportunities for this wealth to continue.
Yeah, and it's like balancing that longevity piece with the legacy and the management and creating the transfer, the wealth for the next generation. I mean, that's a new kind of balance, and it really goes to, it's such a huge opportunity though, because one of the things that they do point out is that this increases the number of clients. Without going out and finding new clients,
Right.
there are clients there, ready to go somewhere else. And culturally, there are differences. For example, in many, other places like China, for example, where the family unit is very tight, and things happen generally, well, along the
Generationally.
family throughout the lifetime. It's not just end of life, right? Or when parents get older, and that kind of thing has to be taken into account from the start. Who is my client, right? Understanding, it's not a rubber stamp. Here's your choices, your portfolio. What's your risk, high, low? What do you want to invest in? But it's like, where am I? What's the context? As somebody who was a long distance caregiver of an elderly parent, it was extremely hard to manage my mother's finances from a distance. It was impossible.
Yeah.
And I think that's where financial technology is going to continue to evolve and find opportunity to create ways for those kind of co-management, co-shared kind of opportunities to exist. And whether or not wealth managers are able to kind of work collaboratively with those tech tools, I think becomes part of the question as we move forward as well.
The authors do talk about the fact that most of the wealth tech solutions to date are really geared to serving the firms, the wealth management firms, their middle and back office, their distribution capabilities, their operational capabilities, versus we need more solutions that are really thinking about the end client. Like you were saying, Stessa, what does a caregiver think about, or somebody who is the head of the family governance in a high net worth situation. And then there's the cultural aspects that you talked about. And I must say, I really loved that part where the authors spoke about the Japanese culture. I didn't know about that, how the philosophy is called, that every transaction has to be good for the buyer, for the seller, and for the society. So, how can you serve clients in that region without understanding that? Or, I know from my years on Wall Street, because a lot of them were spent with Latin American clients, it wasn't in private banking, but I understood the culture there, being in person, becoming kind of part of the family, like an extended family for a relationship manager is important, which is not the case in other regions. It would be a privacy sort of violation. So all this is important. And at a time where the art of balancing the human relationship with technology is top of mind everywhere, right? And it's clear. One of the things that is clear through the book is how to upskill and the advisors so they can have the skills, the listening skills, or the other skills that we mentioned to develop their relationships and expand their client base while using technology.
Well, to that point as well, one of the things I'm glad the book really underscored was not only are you talking about the generational issues on the client side, we're also talking about the fact that there's a significant chunk of advisors out in the industry right now that are also at retirement age or pushing that retirement age later. So part of the shift, part of the disruption that is going to occur within wealth management is, are you bringing that younger generation of wealth managers in? What do they look like? What is that? What are the expectations? What can they leverage and take advantage of as all these like outside cultural issues begin to shift?
Yeah. And this is where wealth management can learn from other parts, especially retail banking, that have been pushed. How are we going to attract younger developers and innovation? How are we going to drive innovation if we don't have newer employees? Not anything against older employees, but how are we going to even attract employees in general if we're not using technology that's up to date? And that pushes the question of these older back offices that are siloed around data, siloed around integration with other back office systems across the bank, hard to integrate from an API perspective to push out a customer experience and integrate all kinds of global and mobile capabilities. And I think wealth management, whether it's inside a bank or separate firms, should really learn from the pain that bankers have gone through, especially in retail banking, and not repeat it. Please don't repeat it, because we went through all these iterations of digital banking front ends that still didn't address the basic infrastructure problems of core banking systems that were like, that's a nice idea. We'll put it in the queue and do that. Never.
Right, exactly.
Or a custom thing that's going to take 2 years. And this kind of infrastructure rigidity is not going to welcome AI. technologies and applications. And the burst of announcements that have come lately around, you know, AI from every single player, large players, horizontal players,
Mhm.
is just astonishing. And wealth tech will get run over. It will get run over by all this.
One
And
of the things that,
it,
uh,
April makes a great point
right.
about, yeah, the diversity of talent will build better products. So, I think, yeah, I'm sorry, Jim, if you want to diversify and you want to innovate and build these complex services and products, you're going to need more
One of the
people.
things too, I think we were talking, and I know Effie is talking so much about agentic AI these days, has some brilliant content out there on her own site right now. But one of the things I've been talking a lot about is the issue of agentic discoverability. And I will guarantee you, there are so many wealth management firms right now who haven't tended to that piece of their own information that's available online. And right now, if you're not recalibrating to make sure that you're discoverable by ChatGPT and by Claude and by these various large language model
Gemini,
supported searches, right, Gemini, all the rest,
Yeah,
it's if because these younger generations, especially, that's where they're going for that first glance of information. Help me understand this, help me understand this. And if you're not even discoverable, you're invisible.
yeah, yeah. So you could have the greatest website, and if it's not built for AI,
Mhm.
and on the flip side, I think one of the concerns should be about the value of your firm's IP, your intellectual property. If you're putting out lots of content that's valuable, I think the firm has to think about, do we want to make this discoverable? If not, how do we do that? Do we have the talent? Do we need to bring somebody in? But what do we make discoverable and what not? What do we put behind, not the paywall, but behind the client login?
Yeah.
Um, and also, is the white paper, and I've written plenty of them, the thing that people need to read? Is there a better way or ways, multiple ways, to help your clients or prospective clients learn what they need to learn about, or to discuss anything?
I mean, that's one of the larger challenges in financial services industry overall. We've been so focused over the years talking about through that product lens and portfolio lens, as
Right,
opposed to thinking about what are the things that people are actually asking about, the questions that they have, the pain points that they're dealing with. And so if someone of high net worth, ultra high net worth, still, they're going to be looking at a site or at information from your firm about that's aligned with what they need at that moment, not
right,
it's
not
it's
the
the classic question of, if you are seen as a product supermarket or delicatessen, if you
right.
want, then that's wrong. I mean, for wealth management with a difference. What you need to be providing is these solutions for your life. What do you need?
right.
Advice, lifestyle, whether it's around health, retirement, family governance, all these issues, philanthropy, access to business networks. I mean, one of the examples I remember from the book, where some wealth manager was saying that, your services can be really complex. There's no limit to the complexity of services you could offer if you're a wealth manager. And they apparently have, I think, a matrix of 14 services right
Mhm.
now, and there's more. So there's a lot out there that is really what you need to be able to offer that retirement hub, the holistic thing that encapsulates all the values and the differences that we spoke about.
Mm-hmm.
Yeah, yeah, and if wealth management is not providing that personalized, customized, highly customized, I hate to use the word experience, but if that is not the experience of the clients in that relationship, whatever in the name, who else is going to provide that customization? So I don't want to just get, what is retirement when I'm a 35-year-old millionaire? I want to know, maybe I've said, hey, I wanna leave, I don't know, Denmark and move to Australia. Is that a feasible thing? I want that kind of advice coming to me in context of what my net worth is and where my businesses are, where my income is, and that's harder and complex. And just locking into one provider is probably not going to do it, and there's no single bullet. I think that's around infrastructure. I think also it calls back to, obvious other books that we've read around the customer centric innovation
Mm-hmm.
and the ethics, around knowing, the client knowing the company's values also, because that's going to be something to align on. What are their values and what are their ethics? Is this the kind of company I want to associate with? And also the advisors knowing what kind of person is this? What are their values? Maybe it's not somebody I want to work with, right? But also, how do I get to know that person and their values before I start telling them, oh, here you go. Your dad invested like this, so you should invest like this, right?
Right.
That's what he would have wanted, right? I
And
don't.
one of the real practical things, I mean, think about the kind of wealth advisors that that have spent, $100,000 to outfit their latest office suite to deliver a customer experience that's at a certain level, but at the same time, they haven't embedded video into their website or into their mobile app so that a younger user that's used to having that kind of interaction can actually have a video conversation with a wealth manager, with an agent that's actually person to person, but in a way that again is aligned with their preferences. So all of this is shifting, and it requires kind of, as I said earlier, a recalibration. And this book really makes that point to me.
Yeah, yeah, and bringing in the people that can advise on the technology, whether it's in-house or outsourced, can give them a new perspective on the way, wealth management has been working.
Mm-hmm.
I mean, are they tapping into the digital innovation teams within a bank, right? Because there's probably a wealth, pun intended, I guess, of, experience and expertise that, you can tap into inside a bank.
Mm-hmm.
I mean, it's, so I think there's a real opportunity, that's sitting there not to repeat mistakes and move forward before it's too late.
I think the business model, the business model shifts that the authors talk about are very important. They talk about from two angles. One is how the advisor is compensated from the customers, shifting away from the percentage of AUM to some retainer, because that aligns more with a lifestyle advisor, with the retirement hub idea. So that's one. The other thing that's important that they discuss is the ownership structure of the wealth management firm itself. Whether advisors could be, and how they could be a part of the ownership structure of the firm, and that is something that is also important. Important decisions in designing and the right incentives based on the vision of the wealth management company and its values, and aligning the advisors that you work with and are, is it a cooperative, whatever ownership structure it is that is decided. So I find that
Yeah.
very, very interesting
Yeah. And
because
yeah.
yeah, it's a distinctive way to work, and it probably doesn't work. It works for the independent wealth management firms because
Right.
there's the other category of the big banks, the Bank of Americas, the JP Morgans that have wealth management divisions. And there, I think that doesn't work, but there's other advantages of using, hopefully, the data from the other part of the bank as, breaking that silo between retail banking, business banking, and wealth management,
Yeah.
and really leveraging that,
Yeah.
which
And
brings
yeah.
us. I think that we should discuss our
Yeah.
our uh, closing Monday morning mandate. What are our ideas
Yeah.
here? And I'm tying to what I just said. One of the For me, what struck me out of the book, and this is an insight, it wasn't explicitly discussed, is that all wealth management firms really start with the investment part to manage the portfolio of these high net worth individuals. But really, what needs to happen is to start with their payment behavior. Where are they spending their money? Do you know your client? Because by looking at where these people spend their money, you can really understand who they are, what they care about,
Mhm.
and their values. So I would say that it's like if you are a wealth manager and you pull up a file of a client of yours, you look at their portfolio and so on. Do you really know where they're spending their money? Because if you don't, then you know nothing about your client. It's really like uh, you're managing their investments in a silo mindset completely. And the authors make this clear. Offer your clients payment services. You need to start by paying their bills. Then you're close to them. Then you understand what they're doing. So this is important. And if you are a big tech firm, then you can leverage the data from the different departments with insights. If you're a pay tech firm, then you could explore relationships. So I think this is an important thing that jumps out of my, of the book, for me. I understand that after I'm thinking of this, yes, you need to understand your client, but that payment data would be the best way to understand your client. It wasn't clear to me. So this thing that wealth management firms should start with that because that is valuable data and you can build relationships from that, I think is a very important insight
Yeah.
from this book. Handing it over to
Jim?
you guys.
I want to pause just a moment to kind of pull back the curtain a little bit on our FinTech Book Club. If this is your first time with us, or if you've been with us over multiple episodes, one of the things we are shifting here is we want to end each of our broadcasts with this idea of what's the one thing from the book that really should cause you to do something differently on Monday morning. So essentially, this is how we're wrapping up today. And I think for me, the really practical thing I'd suggest is if you're a wealth manager, look at your top client relationships right now and ask yourself, do I actually know the entire financial household? One of the things that this clearly underscores is the institutions that win in the next era of wealth management aren't going to be the ones that just manage assets. You know, you've got to help families define the meaning of those assets. You've got to be able to help, you know, from Monday morning forward, you know, really working with entire families, with entire ecosystems. You know, that means, you know, engaging the spouse more completely in your conversations, finding ways to build relationships with adult children much earlier, like today. So help clients articulate the purpose of their wealth right now, not just the performance of that portfolio.
And to
Yeah,
add, Cesar, 1 second, let me add to build on what Jim and what I said concretely. Make the call to your client, the wife or whoever is there, and ask, what does retirement look to you beyond the numbers? What does it look like? What is your vision beyond the numbers? Or ask the question, if money wasn't a constraint, what would you want to be doing with your money? Those types of questions really are listening exercises that are really valuable to understand your client. So, you know, along those same practical lines, just use these questions beyond the performance. Over to you, Stacey.
yeah. I guess my takeaway is for bankers, in particular retail bankers. First of all, I believe they should read this book, and afterwards, really investigate your strategies around customer acquisition, retention, profitability, and product development. All of this, and how we leverage our people, the technology, and institutional knowledge to advise customers. And, you know, PFM, personal financial management, I think the strategic flaw was that it didn't take into account relationships between and among people. And I would say relationship management is what banks could do
Mhm.
using technology. It doesn't have to require in person, but it might. And that if you look at your strategies around customer acquisition and retention and profitability, if you look at it that through a relationship lens,
Yep.
it will change the way you're doing business and you'll become more customer centric.
Yeah.
Yeah,
Yeah.
yeah.
So I think
And
that's probably, yeah.
yeah, I mean, again, before opening it over to questions, for me, it stuck in my mind the retirement hub concept. And I think bankers should think of that too. Hubs in general,
Yeah.
it's broader thinking, broader than transactions, how to understand your client, how to listen to your client, going beyond the transaction. In the case of the wealth management, is beyond looking at the portfolio, really trying to understand, building relationships. You're saying, Stessa, how do you acquire clients? You know, the family, broader conversations that you are suggesting, Jim. I think all these are not only relevant for wealth managers, standalone wealth managers, but all the other players in financial services.
I mean, just look at the default age now in the US of buying a house now is 40 years old.
Right.
So if that's true, how do you save for a down payment and retirement at the same time when those times of first house buying and retirement are much closer together? And forget about things like family building, which have, especially in the US where we have sad healthcare insurance. How do you build a family if you have, if there are challenges or, so that all becomes much earlier, a bigger problem than, oh, how do I just invest for retirement? Well, how do I do that and save, the gazillion dollars for a starter home.
Right.
So I think, yeah, it raises I think a lot of questions, strategic questions, not just for wealth managers, but for all bankers and payments folks, up and down throughout the bank and outside the bank. So I want to wrap up now. Unless there's any more questions, I don't see any more questions in the comments. Um, let's talk about what's next
Oh,
for
yeah.
us.
Yeah.
The next Fintech Book Club discussion will be June 5th, 2026, and we're going to be discussing The Agentic Bank by Driss Temensamani. I hope I pronounced that.
Yes. Who is at Citibank, I believe.
Yeah, yeah. So
And
really,
yeah, we should add here that we have a website and a YouTube channel
yes,
that you can check out. Um, it's on our LinkedIn page. We'll put it here in the comments too, where you can go back and see other recordings, other discussions of the previous books that we have discussed. We have last year we presented at Finovate Fall in New York, and we discussed all the books that we had read up until then in a very unique way, um, sort of looking at relationships, themes across them, how they connect. And we plan to do more of that going forward, and bringing in general the different fintech books. We're building a library for you to be able to look at fintech books. We can't read them all. We are looking at books that are published from 2023 on. When we started in September 2023. Again, this all started at Finovate Fall. And yes, books from different players. There's people that are working at big companies. There's startup founders. There are other practitioners, consultants. In some cases, other even regulators. We're seeing all sorts of books, and fintech is becoming broader than
yeah.
we can manage, right?
Right.
Yeah,
Uh,
and if you don't see a book that you're publishing in the next year on our list, send one of us a message, right?
yes,
You
yes,
know, and also, when we post the video, will be posted to LinkedIn. If you have questions about our discussion or the book, post them there, and we can continue the conversation.
Yep.
Oftentimes, hint, hint, April and Nick, the authors get involved.
Right.
yes, yes.
and answer questions and discuss the book, because this is not simply us talking about it. We want everybody to be able to participate. So
Exactly.
okay,
And we read these books. We all wear glasses, but when we read these books, we wear other lenses that are more practical, and we think, we have different backgrounds, but all of us are more advising and consulting in the industry, and we wear those glasses when we read the book to understand, what does this mean for the people on the ground, the people that are building, the people that are serving the customers. Really, we are interested in the practical applications, whether we are looking at the book that is more assessing the market or more forward looking. Typically, most books are both. uh, and that's the kind of lens that we like to take.
yeah, yeah. All right, awesome. Thank you everybody for attending and watching this afterwards. We'll see you in June with the
Excellent.
Agentic Bank.
Thank you for
Thank you
attending.
all.
Thanks.